Good afternoon, everybody, and welcome to this edition of Ask the Experts. My name is Carl Capolingua. I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be with you today as we get to chat about one of the most important things in your life, your portfolio. Oh, is it that important? Well, it's pretty important, of course. Let's try and unravel the mysteries within your portfolio, and hopefully I can give it insight. Let's kick off with the first one, and this has come from John. John is asking for an opinion on RRL. And what I'm going to do, you see me flick up my, oh, well, why not? Let's put it in here. This is the fundamental analysis tool. I didn't mean to go here first, but let's go here. You can see Treasury Wine Estates disappearing and Regis Resources appearing. So this is Thomson Reuters Refinitiv Icon product, and whilst they provide for me all the historical financial data for a particular company, in this case RRL, they also give me the broker consensus data, and from that I make my own little financial valuation assumptions. But we can see that there are 11 brokers covering Regis Resources, 6 with a buy, no strong buys, 2 holds, 2 sells, 1 strong sell. It's pretty unusual we see sells in the market, so brokers feeling pretty strongly about this one, or at least quite divided. Their average price target, however, is looking pretty positive, 228, and that's allowing 57% upside from that last price. Now, that last price is sometimes slow to update, potentially up to 24 hours. So take that with a little pinch of salt. And then what I do over here is I look at their earnings per share estimates, and I say, well, 38% earnings per share growth is solid. I mean, that's amazing, especially for a miner who has to deal with all sorts of issues with mines. We heard of Evolution last week come out and tell us that there was too much rain in some areas where they're doing their mining. They couldn't get labour because people had COVID, etc., and higher input costs, higher diesel costs, etc., etc. So I'm not going to. When I see a growth rate so high, this risk level is execution risk. Okay, what is the likelihood of them getting there, or what is the likelihood of them not getting there? Because if I go high risk, I'm saying, well, there's quite a high chance they won't be able to achieve such an amazing earnings growth rate. Okay, and that's not my earnings growth rate. This is coming from the brokers. I didn't make this up. We can see some volatility anyway, because the last 2 years, they've actually seen their earnings fall substantially. So then I go, so that you can see how changing the risk rating, which changes our discount rate, the rate at which we discount back those future cash flows. Obviously, the higher the rate, the harsher we are on discounting those future cash flows, the lower the present value. And then we go here and we'll check out the PE. So what standard are we holding this stock to account? And you see the market is actually factoring a very, very low PE. Now, don't say, well, low PE must be a bargain. Often there's this value trap, and low PEs often demonstrate high risk ratings in the market. The market is unsure that they're going to hit those. Having said that, in the past, it's never been a high PE stock. I mean, it's always been around about 5. So I think our estimate here of 7.3 is not unreasonable. And this is just saying based upon the future, the median of the future estimates. I can also go historical. Sorry, that's all of them, I should say, and just historical. Okay, so just historical, you can see the median is about 4.7. If I factor in everything, that 13.98 comes into play and it pops it up a little bit. Let's go F, forward looking, and we get a valuation of around about $1.45 for Regis. So looking about fairly value based upon my assumptions, and they are my assumptions. Beauty's in the eye of the beholder. You might have a different view on what your target PE is. For example, you might say, hey, Carl, I really think this is fantastic. I'd be happy to pay 10 times for this one, in which case it becomes a screaming bargain, maybe closer to what the brokers are thinking. I don't think there's any evidence to suggest that's valid, so I'm going to go with that and say it's fair value at this point in time. Okay, the other thing I need to do for you in these sessions, I just clicked the wrong button at the start, was to look at the charts, generally where I tend to go first. IGO on screen, there's no ulterior motives here. It's one that I'm going to be looking at tomorrow in the call. I'm appearing on Ausbiz at midday. Tune in if you want to hear my opinion on this and a bunch of other stocks. But I'm concerned about this one. I'm concerned that we are moving through this phase here from long-term uptrend, okay, where we've got light green, dark green zones. So light green zone is that short-term trend ribbon, tends to support prices on the way up. You can see through here, here. Look, it doesn't work all the time. Slipped there, didn't it? Here, pretty good, and then fails. We come back up, we test the ribbon. The ribbon is no longer acting as support, it's acting as a resistance. We come through the long-term trend. We flirt with it a little bit, as we often do. We make lower peaks coming in, indicating building supply. So we've got supply here, supply here, supply here, supply here, and it's building, and then we crack back below that trough, really that key trough, that key break of that long-term uptrend creates this key trough, and we get below that. Typically, what we would expect is the price to continue to go down because we've made that transition through that equilibrium phase. So we say this is the excess demand or a demand side market. And then we go through the equilibrium phase through here. I'll just abbreviate it for you, where demand now equals supply. You might think about why demand might decrease to match supply, because here demand was greater than supply. So why did demand decrease? Potentially demand was the same, supply increased. Either way, the equilibrium's changed, and potentially go here into this excess supply market or supply side market. Now, I think IGO is a fantastic company, and I think it's got great prospects in the long term, but it kind of doesn't matter what I think. It only matters what the market thinks, and I'm concerned about this one. What I might do is come back to IGO, because I was in the middle of going to RRL, got distracted, and looking at this one for John. And look, clearly we've got a downtrend. I know John's probably not in this. He's probably thinking of whether it's more of a turnaround play, and whether he's looking to pick it up or add it to a portfolio. And I'd suggest that, because I know John's been in these sessions for a long time, and he knows my philosophy on investing, and that is we do not buy when we see these giant, big, dark pink zones, and especially when we are respecting these light pink zones as well. But look, I think this is a pretty decent rally. I mean, we've got some decent candles through here. We've got a nice volume influx through here. So the chances of this being that last, sort of exhaustion of supply, that last bit of supply that had been holding on in hope, pushing into the market and being absorbed, and we know it was absorbed by some demand money coming in because the price went back up. How much supply did we remove? Probably a bit of supply. Didn't see a lot on this side, and many people go, well, this rally here, this last couple of candles, and the very positive candles, have come on very little volume. A lot of people say, oh, okay, Carl, that rally doesn't mean anything because there's no volume. Okay, well, volume and price action go together. You can't just look at one without the other. And we've got some great candles with very little volume. So great candles and price increase tells me there's demand in the system. There are buyers out there that are thinking this is very cheap. They know it's very cheap because they're not so fussed about price anymore. They're paying 145, 147, 150, 160. They're paying up. And the low volume indicates there's very little supply in the market. So to get the stock to come out because the supply has been exhausted, that demand side is now having to entice that supply side with higher and higher prices. So you want building volume in some circumstances, but you prefer not to see it in others. And this would be one of those scenarios where you want to see prices bounce back strongly here because you've had that supply exhaustion already on lower volume. Whilst this is an interesting start, let's just see how it goes with one test, because at this little rally, the rally so far, look, hasn't been tested by supply yet, right? So let's let the supply side sort of regroup a little bit, come in and just have an impact on the market, and then we'll be able to see how the demand side responds. So if we see very shallow pullback like I've drawn on screen, if we see some nice white candles come in this area here, so let me just draw them. The candles we do want to see in that zone is this one. So the white candle, and look, the longer the body, the better. Or you might see the one that, let me copy and paste that, might look more like this. Okay, and actually prefer this one. I think this one's a really neat one on a pullback, the one I'm about to show you. Okay, and we say that pin bar is one word for them. They're called hammers. They're called dojis. Potentially, there's a few words for them, but they all represent the same thing. They all represent, I guess, what would you say? The exhibition of demand, excess demand coming into the system, like entering the system, a changing of the guard perhaps, because the only way you can get this candle is if you start with a very bearish open. Okay, so we open here. It's just the way candles are constructed. We opened here. We had a very bearish start, and then the demand came in. So the excess demand was lying in wait, and that's in a strong rally. That's what the excess demand will do. They'll buy up to a certain point, and then they'll say, look, you know what, this is a little bit hot. We're going to wait for a pullback. Okay, and this is why I draw these patterns all the time with this sort of upward price action. So I say we've got the good price action, our buy the dip price action, right? Our healthy price action where this last trough. Okay, so we call this T0 is at or above the second from last peak. So we call this P1 because technically that's P0 using this designation system. So the last trough is at or above the second from last peak. And on the way up, because they're buying because they think the stock is going way up here, like way up here. But things get too hot and they say, okay, well, actually, because we've been buying here and here and here, and we bought some here, we might even feed a little bit out into the system here. We might even, lump up the sell side, make the market depth watchers, sell a few of the latecomers will panic out and we'll get a little bit of a pullback, okay? But the best time to buy, because they're accumulating from much, much higher prices, the best time to buy and buy back that stock is to do it when people are selling. And so you precipitate this, you get a bit of volume in here, and then you get one of these candles, okay? And that is telling you that demand side, because we started bearish, in line with this short-term downtrend that was prevailing at the time, but then that demand side's come in, okay? They're back in, and that's when you'll see us push back up. And after you see this candle is when you tend to see this candle. So this candle tends to happen in trend, okay? So this candle, I've got too many arrows here, don't I? You know what I mean? This candle is at the pointy bits, and this candle tends to be in trend. Okay, and they're really great indicators of excess demand and continuing excess demand in the system. So back to Regis, early days here. I can't call it a buy, you know that. I wouldn't call it a sell. There's enough in it to hold it now based upon all the stuff we've talked about. But let's see how it responds on a little bit of a test of supply. If we get the right candles, I still wouldn't upgrade it to a buy, John, because it's still way too early. But hey, you are you might be a little bit more speculative. You might say, well, I'm going to give it a go. But look, if anything, it's a great case study for us, isn't it? Now, what I might do very quickly is loop back here, and I probably would have had it somewhere in the list today. IG, I just want to check out the valuation on this one, and I'm going to look at their earnings per share estimate at 54%. I'm going to leave that as high because the execution risk of actually delivering that is very high. Their PE of 9.3, I don't think is unreasonable. It's actually very low, so we're actually really, I think, holding it to a very high account, and in which case we get a fair value of around about $13. And what I wanted to do here was just illustrate this idea of me thinking I like the stock operationally. I think it's got a great group of assets. I also think it's really cheap, and yet based upon that chart, I can't buy it. And in fact, I'm really more and more moving to a sell. Okay, so I want to, if anything, highlight the disconnect between the various parts of my analysis, because it's an important part of my analysis. At the end of the day, as I use that fundamental, all that fundamental valuation, deep diving into the company, of understanding what are good companies that I might want to buy when this picture matches up. And if this picture doesn't match up, I tell you what, as good as it might be and as cheap as it might look on that last spreadsheet, I cannot be a buyer, okay? And if you don't like, that's the product I'm offering you today in this session. If you don't like it, you feel free to tune out as we speak, because that's what we're going to be doing. Okay. Fibonacci retracement levels for the ASX 200. Also asking John, I'll have a look at the ASX 200 very quickly because I'm sure people are interested in it, but I will not give you Fibonacci retracements because I don't use them, okay? And you would just simply go from here to here and use your Fibonacci numbers and work those out. For me, there's just some mathematical mumbo-jumbo, to be honest, and the only value in it, I think, John, is that other people use it and therefore it may become self-fulfilling, okay? But at the end of the day, those people who use Fibonacci, they become part of demand and supply, and that's where my analysis kicks in. So I'm a price action trader, both from the perspective of day by day using those candles, but then in the medium to longer term using my price action, my peaks and troughs, and then my moving averages. So if those Fibonacci traders or the Elliott Wavists or the Gann traders or the Heikin-Ashis, all these other different forms of technical analysis, plus all that fundamental mumbo jumbo as well, you put that all together, at the end of the day, they're going to appear in my candles and then my my price action. So I don't get too fussed about those Fibonacci ratios. Be careful, because there's also a Fibonacci ratio, John, and that's Fibonacci was obviously an Italian mathematician, but he had a cousin in Mexico that discovered the correct ratio between corn chips and tomato salsa, and he called it the Fibonacci ratio. Okay, ASX 200 today is encouraging. Yesterday was pretty good. It's more and more looking like there's some sort of little intermediate low coming in here, potentially coming in to test this. Let's see how we go here. How are we going to go here? I don't have a clue. Let me tell you, I'm clueless. But the candles will give me an indication. If we hit this zone, this light pink zone, okay, which we know on, for example, the NASDAQ has been an absolute trend killer. I mean, it has just killed trend after trend after trend after trend, okay, uptrend. So we want to respect that zone. We don't want to get too excited until we've dealt with it correctly. And that would be if we come in here with some white candles, some lower shadows, indicating that the market isn't afraid of that zone. In fact, instead of supplying into that zone because they're nervous about it, they're demanding in there and pushing above that zone, then I think we can start to think about higher retracements. So promising at this stage. Let's see how we go there, because if we do see those black candles, the likelihood then switches back to 64.07 and potentially 62.48 beyond, because who's to say the market is done with this idea that there is a recession looming. Do I think there's a recession looming? I think there's a very strong chance that our central banks, these experts, highly paid, highly educated, of course, are going to drive the global economy off a cliff with this obsession about combating inflation and not understanding that the work they have already done and just talking about it, up to 6 months ago, has actually done a great deal of work in eroding those inflation expectations. Getting a little bit off topic here. Now we've got Rob. Rob is asking about TMT, which is not one I'm familiar with, so let's have a look at that one. And it is Technology Metals Australia. Actually, it has come up in my scans, hasn't it? I reckon it probably came up somewhere around here, because I tell you what, it looked wonderful, 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 wonderful here. But then we got these, it's so frustrating. I think there are so many charts out there that just given, isn't it always the way? Another 6 months of that bull market, I reckon they could have done some amazing things, but you don't get to pick and choose how long the bull market lasts. I'm going, supply event here, really, aren't we? The black candle, the trend killer, the big, the big thumbprint, isn't it, of supply in the market. And then we got it backing it up here. And the problem is, I think this is really sort of increasing supply now. So the likelihood, it's just probability, isn't it? Likelihood of you having a miraculous recovery from there is getting slimmer and slimmer. And then you've got actually really two there, don't you? So on that basis, even if you didn't go for that first one and say, well, that's a supply event, Carl told me when I see them to get out 1/3 of my position. Actually, I didn't tell you, I suggested it, and it's up to you what you do with it, of course. We know the drill, right? Minus 1/3, but again, we've always got new people coming in, so we manage our exit. We go minus 1/3 exit based upon that one, certainly, and that would have got at least part of your position out around that sort of 50-cent level. And then this one here is really quite nasty, and you would definitely go 1/3 there, without a doubt. And then what we start to do, if you might have missed a couple, start to look for the troughs that are created between these events. So that one there, and that's kind of your death knell. So there's no negotiation after that. That's just out. Could you have, if you really squinted your eyes, I know it's perfect hindsight, maybe looked at something like that and that, for the people listening who are good at blending candles? That's pretty nasty too, isn't it? But if you miss that, then 100%, that's your final exit. No questions asked. And you are then quite happy, I think, when it gets down to 28, that you managed an exit somewhere around that sort of high 40s. I think, because, if you saw a signal down here, you could always buy back. Okay, that's the past. Let's look at the current. Do we have a signal to buy back? It doesn't look terrible. So let's look at this. We've got a nice selling capitulation. In fact, that's not even the sell side. That's kind of on this side. Okay, so we've got volume coming in here, which is interesting that you've got the volume coming in here. So removing supply from the system. Okay, I don't mind it. So that's the first push, right? That's your push. So supply removal is white candles, volume, and then in line with what we said before, we want to see that volume decrease on the next push. right? So we want to see next push, volume decrease through here, and we go back up. So not bad. Today's candle's okay. I can go hold if you didn't get out. I think there's more than enough in this to suggest that demand is coming back in. I don't think I'm a buy. I think there's just a little bit too much uncertainty around here, too much potential supply in the system. So I'm watching this level as a supply zone, really. We did touch it though, didn't we? So if that's a supply zone, that's our first test. So we've removed it. So imagine that, if there's this much supply at that zone, and we don't know how much is there, but let's put a picture to it. We said that was that much supply. Well, we've had a test, so we did remove some of it. Let's see how it goes in the next test, and how the candles appear, remove a bit more. But I think this is the key level now. I would be interested in upgrading this to a buy if it closes above 46 cents. Okay, and just watch the candles in here. So it's definitely one you can watch. Hey, is this the best one I'm going to see today? I don't know, because we haven't seen all the ones today. But it looks very interesting. So let me just look at here. So I just want to see what happened here. Okay, so we've got a little bit of a blip there on the volume through here. So I'm looking for how much supply came out. Look, a little bit, not much. And then we did see volume come down. Yep, which is what we wanted before, as the price recovered. And then you get your push, and then you want to see it come down again. So that's okay. I'm pretty happy with that one. So TMT, definitely solid hold there for Rob. Can't quite get to a buy just yet. Rob saying the DFS, which is the definitive feasibility study, is out in 2 weeks' time. So he's expecting it to surge. Maybe. Certainly something going on at the moment. Okay, next one is for Brett. Brett's asking for my favourite stock, PNV. I know last time we looked at it, and it tends to look very good on a Tuesday, Brett, doesn't it? I reckon it was there. And I said, look, hey, it's cheeky, sneaky, looks like a buy here. I know it's going against the long-term trend, but you actually can see since then, the long-term trend has gone from our dark pink to orange. It's telling you it's starting to change, right? The short-term trend is good, and we've got this compression in this sort of 150 zone. Then we didn't get a great candle here, I must admit. This is a shady disappointment here and here, but I like the way it's coming back today. I still think we're okay as long as we hold this. Maybe it needs a bit more cooking. Let me give you some exit scenarios though, just in case. Okay, just in case I'm not here on a Tuesday. Well, I wouldn't want to see it close beneath 130 now. I think that would be disappointing. I wouldn't want to see any more black candles up around 150, especially with those upper shadows. We need to trade with them. We need to get rid of them. There is supply there. It's pesky. It's persistent. So I'm a strong hold. Because I've called it a buy a couple of times, let me not drag anybody else into this one. But it looks fine. It looks fine. In terms of the volume dynamics, obviously we want to see this thud here happen with some volume. We've got a little bit of supply removal through here. Then volumes come off. That's fine through there. Maybe one more push. If you can imagine a nice big white candle closing above 150 on a volume burst. The reason why we need the volume burst in this case is because we need to get through, right? We need to get through this barrier. The only way to trade, to get through that supply there is to trade with it, okay? We don't know how big it is. It seems pretty big, doesn't it, at the moment? We're kind of chipping away, and hopefully next time's the successful one. Look, we're happy to hold. Brett, would we buy? Brett's also asking, what charting program do I use for my traffic light system? Well, this is called Amy Broker. You can go and buy it. It's a one-off lifetime license. I think it's about $500 or $600 Australian. But then you have to put the data in it. Okay, it doesn't come with data. And for that, I use a company called Norgate Data. I don't get any kickbacks from either of these companies, by the way, and I probably should. So when you call them, say, hey, Carl sent me and he needs a kickback. But yeah, look, I mean, I'm not saying this is the best package out there. It's probably not. It's just the one I use because I've been using it for many, many, many years now, and it's the one I'm comfortable with, and I'm a bit lazy to change, okay? So once I found something I like, I don't have a huge amount of requirements in terms of my technical analysis. It just needs to do my ribbons, my candles, and I can draw stuff on it. I'm happy. So I'm not saying this is the one for you, but, if you want to do the stuff I do and you feel comfortable watching me and say, oh, I'd like to do that, then, get in touch with them, okay? Now, these ribbons, there's nothing fancy about them. I did create a program that fills them in, which I can do in Amy Broker, okay? So I can make this moving average which if I hover, it'll give you all the secrets, and they're not secrets, okay? They're just moving averages, and I've never made a secret of these. Everybody who comes and listens to me and Ask the Experts and ask the question, I tell you straight away. So I've got my 21 EMA and my 34 EMA. Okay, they're my short-term trend ribbon, and all I do is programmatically in the coding just make the two moving average, the distance between the two moving averages fill. Okay, and then obviously I use if-else conditions. If you've done any programming, it won't be hard. If else, the trend is doing such, moving averages are getting closer together, for example, then I'll go to the traffic light system. Look, there's a little bit of IP behind it, I guess, and maybe we'll have if there's enough interest, what we can do. Think Markets has just launched their new trading app, and if there's enough interest, you contact your account manager and say, hey, we want Carl's ribbons, and then we'll make a Jira ticket and we'll try and implement that. But for now, 21.34, and then sorry, that's not right. I might have given you the wrong indication there. I'm hovering over the long-term trend ribbons. Those are the 144.233s. Okay, so the short-term trend ribbons are these ones. The light pink zone, 21.34, and then this is 144.233. And you might say, okay, how did you pick those, Carl? Well, trial and error over many, many years of using different values. These are the ones I've settled on, and I'm over a decade. Easily of using these same ones, and they've worked really well for me and you've seen them yourself over so many different instruments, different markets, and even different time frames. Why those numbers? They are Fibonacci numbers. Are they Fibonacci? I think they are Fibonacci numbers, aren't they? 21, 34. Just a coincidence, I'm sure. Okay, next one is for Amy. Amy's also asked about PNV. Is it good for an industry today? The candle's good today. Hey, if it closes there, it's good. It's good. But I told you I don't like those two candles. They make me a little bit concerned. So, okay, not great. SYA. Amy's sneaking in an extra one, but I will do it because obviously we did look at PNV. Has this one given us enough evidence to move back in? I like this. Okay, so that's a great candle. Yeah, no doubt about it. As bad as everything else is, that's a great candle. The fact we haven't moved back beneath the low of that candle, I think that's good. We haven't exactly seen a continued move to the upside, and that's what we would need to see. So, this pattern, the arrow pretty much says it. This is what you'll need to see. Would I buy it here? No, I can't. Would I buy it even if it did break above, close above that 18-cent, sort of 18.5 cent level? I don't think so. I don't think on any particular day this is going to be the best one out there, but it would get it back on my radar. And then I would want to see sort of how it responded at that long-term trend zone. Does it come back? Does it test it? Does it hold it? Do we get the right candles? So I can certainly get to a hold on this if you've got it. Okay, beneath here, I think you're in real trouble, but I can go hold it if you've got it. Would I buy it if I didn't have it? No, I can't see any reason to buy it if I didn't have it. But I don't think it's a sell just yet either. I think you if it gets to 20, well, there's 25, 30% upside. Where else are you going to get that? So, that's the potential. Let's see how it goes. Next one is Audinate, which has done a great job in turning around. Yesterday, it was not a great candle. Okay, that's disturbing. This one here. So if we call them candle 1 and candle 2. Okay, candle 1 by itself is not great, but not necessarily a trend killer. I just don't think it's big enough. It didn't eclipse the previous day's trading. This is the okay. Well, let's label. Let's go going back to front here, but let's call that one candle 3. So candle 3 is my demand side candle. Okay, and we can see that at the bottom of that candle, there was lots of demand. How do you know? We'll look at what happened on the day. And we see that the demand did come back in. It's still there. It's still lurking in the market. You can see on that lower shadow and that lower shadow. But the problem now is that there is some supply here. Okay, we do have some supply here. Why that level? Maybe this. Maybe there's a little peak there causing some issues. Okay, I don't think it's this one yet. That's where I would have thought it would have gotten to pretty easily. Maybe it's this one here. Okay, we don't know how much is up there, but looking at candle 2, there is a bit. Yeah, there's a bit going on here. So the question now becomes, well, can demand hold? Can we maintain this short-term uptrend? Okay, can we prove to trend followers like me that this long-term trend zone, is no longer impeding price action, but potentially supporting it? Okay, so we've got a bunch of questions, don't we? That people who are waiting to apply capital, people who are potentially on the demand side of this, they want to see, I think, a few more questions answered. I can say with great confidence that if we can close above this high, 795, then it's all on again, and this will make the next leg up. But if we start to close beneath this level here, and I can't get it because I've got too much stuff on screen, so let me select that. That low there, 727, I'm starting to get a bit concerned about this one, okay? Not gravely concerned, because the short-term trend is still very strong, and we will see how it behaves in that zone fairly shortly as it catches up to price action. But enough to just put me on alert. And I'll be watching this one quite closely. Volume dynamics, let's sort of have a look through here. Pretty quiet, actually. Not a lot of supply through there, which is interesting. And then you hit the supply sort of there that day. Okay, well, there's a bit in there. Yeah, look, I think it's okay. I'm happy to hold it. I'm sure a few people are on this one. Would I buy it today? No, I can't see any reason to buy it today, but we are more skewed towards the buy case, I think, than the sell case. Okay, so it's a hold. Let's keep an eye out for better price action signals, potentially to upgrade it to a buy. What I might do for you, James, because I know a few people do have this one, is head over here and have a look at the fundamental analysis valuation for Audinate. Let that load up. Let's kick off with the brokers covering it. So it looks like we've got 4 brokers, 1 strong buy, 3 buys. They're pretty positive, and their target, 965, allows for about 28% upside from the current price, assuming that's 751. Let's, we don't have any earnings this year. You can see that's minus, and that's minus there, and it's minus there. So my valuation tool isn't going to be able to value it because it does need positive earnings and then a number here after the first positive year to give me a growth rate. So if I don't have a growth rate, nothing works. See, it says here, error, no GR. GR stands for growth rate. So I cannot value it for you. But what we can say is that it is trading at 200 times FY24 earnings. It's the year it is expected to make its maiden profit, and that is a lofty valuation. Okay, that's all I'm going to say about that one. As you know, I prefer to look at the chart. ARU actually is the next one. So this is for Terry, and he's asking for BKW. Okay, I'll do them very quickly. I like the fact that we're holding this level. So this is crucial now. What happens here? So this candle, this white candle's good. We've got a little white one today, needs to stay that way. The only thing that's going to save this is if we can really get above, say, 32 very quickly. So I want to see a nice white candle on this one that closes above 32. It's very similar to the other one we looked at, which was Sayona. They're different businesses. One's lithium, this one's rare earths, but let's face it, same themes in terms of risk on, risk off, isn't it? So we want to see this white candle that closes above that, and then I can move back to a confident, solid hold on this one. Would it be a buy with that short-term downtrend still heading down? It's still early for me. So I would need to see, Terry, you know the stuff I like to look at, get above that short-term zone, come back, test it, hold it, little supply test, see how the demand side responds, and then with the right candles in this zone, again, you know me, I'll be all over it. I'll be tweeting about it. You know, it'll be back to buy. Until then, just enough in it to hold it. And where you would be looking to sell, and unfortunately, you know, these things can happen. That low there, 26.5, close beneath that, and then it's probably heading back down the other way, isn't it? Okay, so a little bit delicately placed there. Okay, BKW, do I dare? I'll do this very quickly, sort of a ditto. This is all very encouraging through here. And this is actually a nice case study because I've talked many times today about let's see how the demand side responds to a little bit of supply in the market. Where does the supply come in? Lo and behold, at the pink zone. It's interesting. I'm happy to keep an eye on it, Terry, but it's still so far away, isn't it, from really challenging us as a buy. It would have to do that, and we've still got this. So in the meantime, whilst I can see some interesting signs demand is returning to the system, I can't get to a buy. There's going to be supply in here as well, around $20. And risk rewards, if you get in here, how much upside is there? So I'm going to go pass. I'm going to go pass on that one. Let's go to BSL for Craig. Maybe Craig's asking about potential shorts, because if you are Craig, I think this one looks like a knockout for a potential short. So it's just the candles in here. They're so very weak, even as the market has had a decent rally. And a lot of these risk-on stocks have had a rally as well. Just look how weak they are. Look how little response there is from the demand side. You tell me what you think the demand side is thinking here. People sitting on cash out there, and let's face it, we love our cash, don't we? We like to have more of it. We hate to have less of it. And when we invest it and therefore take risk, because let's face it, now it's not just this one, but right. Risky Enterprises Limited, right? That's the ticker code. At the end of the day, every stock, not just Bluescope, every stock is risky, right? I mean, the way money thinks is that what this is a picture of is a picture of risk. And we're only going to take on that risk if the reward is sufficiently great to do so. So this demand side here, these guys are sitting, you've got to imagine these guys as cash. And do they want to put that cash to work in Bluescope right now, given the global macroeconomic backdrop? And I would suggest to you they're not falling over themselves to do that. And then let's ask about the supply side. What are the supply side thinking about this stock right now? Well, look at their fingerprints. What are they doing? Black candles, upper shadows, lower peaks, lower troughs, established trends to the downside. Because at the end of the day, the supply side, they own this risk. They own it. So the question is, do you want to own the risk or do you want to hold the risk? I would say the people holding the risk want to get rid of that risk, and the people who don't have the risk don't want it, if you get what I mean. Another great case study in this idea of demand side market, equilibrium market, we crack. We test, retest. To be honest, this one's tricky because well, that's one hell of a retest. And remember what I said about that key trough after the crack? That's an interesting one. Once you break that, it's usually all over Red Rover. I'm happy to go sell on Bluescope. This one I'm quite confident that one's a sell, Craig. Next one is AR1, which was looking great on this day here. And again, I can't tell the future. I think the CEO resigned on that day. Literally on that day. So if I said it was a buy on that day, or to keep an eye on it, see how it goes around this point of supply, I think might have been what I said. I didn't know the CEO was going to resign. We don't like this, and if it doesn't pull its socks up real quick, I think this one's in trouble, because we do have supply and building supply. Okay, so yeah, I think even these two don't want that. Even these two together constitute a supply event. So that one and that one together, I think you would go manage your exits on this one. So minus 1/3 on the basis that supply is building, and it is evident in the system. And then we've got lower peaks, lower troughs in here. Might even be your next minus 1/3 on that one. Okay, so I know market is dynamic, things can change quickly, and that is evidence of that. That one was for David. I'll quickly do your QGL there, David. It's not much of a chart. I have to zoom in because it's got some sort of reconstruction going on there. Look, the trend is half decent. Is this, to call it a hold, even you'd want to say, well, it's the best thing I can do with my money. I'm not sure it is, but it's not terrible either. It's pretty much sideways at the moment, isn't it? So, I mean, as a trend follower, how do you evaluate this one? You say, well, there's no trend, and therefore hold at best. I don't think I could call it a buy. Look, if it closed above this level here at 52 cents, then it's starting to exhibit these qualities of excess demand. It's starting to reinforce this short-term trend that was in place. So I could certainly consider it then, but not now. BKT is a graphite miner. And some of these I'm deliberately not looking at the fundamentals because they won't have any. They won't have any cash flows. Remember, my valuation tool requires a couple of years of positive earnings. Okay, and many of these won't have them. BKT BlackRock mining looked half decent on the way up, but again, be careful of these ones on the way up when everything's running. So they're okay when everything's running. they do half decent, but never as good as your best stock, right? And this is for Rob. Rob knows that he had a bunch of other stocks that were doing better than BKT. Finally got going, finally got going, just as the backside fell out of the spec end of the market, of course, which is often what these things do. It's just poetic. Look at the price action, okay? It's not the price action we want. We want clean price action, okay? This overlap stuff is not good. And then within those trends, those short-term trends, look at the candles. So many black candles. You're just smacked in the face by how many black candles. And that just tells you that insiders are taking advantage of up days to sell out, or there's program selling in the system, okay? So, and nothing's changed on the way down. I can't see here that there's so much demand coming in just at this stage, and there's been such a huge supply, exhaustion, because there's no supply exhaustion because they've been supplying the whole time. No, this is a no for me. I can't see any reason to own that at this stage. Sorry for the bad news. Rob's asking if it has bottomed. Maybe, but even if it has, Rob, if it goes from doing this to just doing this somewhere over here, is that any better for you? I'm not so sure. Sam has got BOE. I was wondering when I was going to get asked about this one, and we can see lots of scratchings on screen. And I don't know, look, we were concerned about it breaking below this level. Look, it's done pretty well since then. It's frustrating for me because I prefer, if it's going to break that level, then I'm concerned about it. I prefer if it just keeps going down. But it hasn't. It's actually doing some decent things down here. This is a great candle. Not a lot of volume though. There's no volume anywhere. It's just one of those things where you do have just a lack of supply in the system from time to time. I think that's it. There's a bit of demand out there. How do you know there's a bit of demand? Well, there's a bit of volume. Just a bit of volume. I know it's demand because the price is going up, but there's not much supply either in the system. Look, I mean, at the end of the day, the price action is quite good in terms of these three white candles. Fairly shallow pullback. If it takes out this high, let's say close above 193, it's moving back into higher peaks and troughs, and that's all great. And then what that does is gets me to a pretty solid hold, and then we would need to see what it does in and around these zones. And it's so far away from me getting to a buy, simply because as a trend follower, I want this stuff. Okay, this is when I get excited about things, and this sort of stuff here, and it's kind of still the opposite. So whilst there are some reasons to hold this one, I can't get to a buy. Let's just out of curiosity see if there's no way we're going to get any earnings on BOE within FY25. Look, they might have a mine up and running by FY24. Oh wow, okay, there you go. What do we do? Maybe I'm confusing this with some of the other ones. They're not going to have earnings this year. They're not producing yet, are they? Sam, I don't think so. I'm trying to rack my brain now to remember where Boss is at. Don't expect me to know where every uranium stock's at. Anyway, I'm surprised by that. 600%. 1,500%, my valuation tool's not going to go so well. It's telling you that fair value is at $6. 4 estimates. Yeah, there's not a small number of estimates for a company like Boss. 1 buy, 3 buys. Well, anyway, there's value in this, Sam. Just in looking at the broker consensus there. I'm not even going to try and take a stab at the valuation. Hopefully that put some colour around it though for you. ALU, Altium, this one's coming for David. One of those high quality tech stocks, has obviously come down with the NASDAQ, but holding reasonably well. There's a bunch of white candles in there. Yes, there's some blacks, but I can see quite a few white ones in there as well. How's it going through here? This was interesting. That sort of tailed off through here, so that's okay. Maybe supply is not as active in the system, not as motivated in the system. A little bit concerned about this because we're still in the downtrend, and that's really the message here, isn't it? The balance of probability is still this. It's still to follow this trend down. I don't think there's enough in it just yet for me to get too excited. If I go back to Audinate, it will give us an idea of the stuff we do want to see. So you can see the strong lower shadows coming in. You can see the peak there, and then breaking above it with the strong candle here. So higher peaks, higher troughs, shallow pullbacks with lower shadows, white candles inside the movement of the trend. Light green zones reappearing, holding the price up now, moving into testing, dealing with the long-term trend. These are all the things that need to happen on ALU before I could get too excited, and maybe that's a little bit too far away. I think I'm still leaning towards sell here. David, I'm sorry, that low there is 24.32. I mean, if you were holding it, I can't see a reason to buy just yet for the reasons I said. But if you were holding it, if it closes below 24.32, even if it has another supply event candle in here, and you know what they look like, you're getting out. You're managing your exit. Let's have a look at the valuation, because I do think we'll get a pretty reasonable one here, because it's widely covered by the brokers. 13 estimates is very widely covered. Okay, 1 strong buy, 5 buys, 3 holds, 4 sells. Price target 35.37. Isn't that interesting? 30% odd upside. In terms of the earnings per share, we're expecting a big decline this year. I haven't done a deep dive on this one for a long time, so I don't know what that's about. But then for some reason, returning to very steady growth after that. 19%. I reckon I'll go moderate. If I went low, it comes back to fair value straight away. Let's be conservative. Let's go moderate. I think we want to be conservative in these things. The PE at 37.8 for that sort of growth, I think is high. Having said that, historically it's traded much higher, but down to 24 here. So 40 in the past hasn't been unreasonable. Around about 40 in the future, therefore not unreasonable. Yeah, I personally, I'm feeling that I'd almost go a little bit higher here, but let's be conservative. Let's say, even though I'm using pretty conservative outlook, it's somewhere between a little bit overvalued and fair value based upon my valuation. Now, that is at complete odds with the brokers, and expect to see that from time to time, because the brokers don't tend to reduce their price targets when stocks come down that they've called a buy. They tend to leave them up there hoping the price will rally and not make them look wrong. Okay, what I will give you is a more honest assessment of what the fair value is, and I would say that it's not a rampaging bargain at this price, okay, based upon historical and expected valuations. Let's have a look at one which keeps coming up on my scans, Ben, and I have no idea what this does, honestly, and I've almost checked into it a few times and then got busy. What do these guys do? It keeps coming up on my scans. I do my daily scans each day. I haven't published them for a little while because I don't think sending out buy recommendations to bear market is a very sensible thing to do. I think read the room and just pull back on that sort of thinking. But it does keep coming up, Ben, and I would be happy to call this a very, very solid hold. I'd almost call it a buy. Certainly if it closes above that high there, 8.9, so if it's a 9 close, you could give it a go. And if it closed at 9, I reckon it would take that out. I don't think you need to wait for a close at 9.7. I reckon a 9 close, it would look very interesting. Volume looks interesting, sort of that blow-off low, volume declining as the price rises because supply is out of the system. Supply's out, that's good, supply's out. How do I know supply got out? Well, look at that. Oh, missed it, supply's out. So interesting, and then you can see the price went up as the volume went down, which means that the supply's out and demand is still active. Close above 9, I'm going to go buy on this one. I'd love to know. I will check it out. Let's see if we've got any. Brokers that cover it. BFC. Something to do with food, I guess. No broker coverage, so I won't be able to give you a valuation, Ben. But thanks for bringing that to mine and everybody else's attention. Damien is asking for CSL. Now, Damien likes to ask about CSL because we have talked about this on a few times. We said, hey, look, there was something very interesting going on, and I'm talking about this thing here, and I said, there's something up, like something is fishy at CSL. Don't be surprised if it does this. And go back, check the tapes. No doubt I would have drawn something like this. I would have said, hey, Damien, I'm sure he can confirm, I can't get excited, even though there's something fishy going on here, and it's good that this is higher than this. That's all good. I can't get too excited until we see how it responds into this long-term downtrend zone. Then, again, see how demand is tested with some supply, and then if it, makes a higher peak maybe than that, up we can go. And it's actually done all of those things, which is great. Would I buy it? Is this the best thing you can do with your money today, Damien? And if you hand on your heart go, yes, Carl, this is the best thing I can do with my money, I can see reasons to buy this one. I can see a reason to buy it. What's your upside? Well, it's pretty fluid down here, which means, probably pretty fluid on the way back up. I don't think there's any major supply points. Maybe 300 might be a little zone there, okay? But yeah, if that's your upside, and if you set that as your downside, you're better than 1-to-1 up to those major highs. So, and I'm not saying that that's where it's going to stop. I'm just saying, why not have at least 1-to-1 reward to risk until you get to a major point of supply? I mean, that's just sensible, isn't it? So, exiting if it closed beneath that low there would be the way to go. So, look, it's not the best thing out there, is it? But I can see why Damien, who I'm guessing is pretty interested in it, would add some if he was that way inclined. Why don't we very quickly have a quick look here? CSL. I'm curious. I'm always curious to see how this one comes out for us. I must be careful to go back to FY22. CSL EPS growth, fantastic. Low. I think it's a pretty low risk company, is that? I don't think they'll have any trouble executing that. You could go moderate if you wanted to be a bit more conservative. I'm going to go low in CSL. What am I prepared to pay for it? Well, historically, markets paid 40s for it. What do I pay 40 for 14% growth? I'd pay 40 times for 40% growth. I don't know if I'd pay it for that. So I think 30. Let's go 30. That's what the market's kind of thinking is the new norm for CSL, and it gets us to a fair value of around about 262. Now, beauty's in the eye of the beholder. If you did go for more of a historical valuation, then it's looking very cheap. But I just don't think the trend is suggesting that that's where CSL is anymore. Okay, it probably won't command those high PEs like it did in the past, and maybe that old 40 for CSL. The new normal is more like 30, and if that's the case, it's more appropriately valued. What you can do is maybe split the difference. So if I go dynamic, it's going to do a median of the lot, which is really splitting the difference of everything, and you're getting now sort of 333. I'll just put in a few in here for you, Damien, because you might say, "Oh, Carl, I'm wondering, Carl, can you do 35 for me?" It's splitting the difference between the old 40 and the new 30. Okay, and then we're getting 304. Okay, so I'm just giving you an idea. Hey, I'm not going to run out and buy it today, so I don't care. But for you, Damien, giving you an idea of maybe what some of those spreads of those target PEs will give you on the valuation. Next one is TER, which looks good actually. So I'm glad this is starting to pick up again. So I like the fact that this trough here, we've got back to rising troughs. We've got some nice candles coming in through here, and this looks good again. Solid hold on this one. You should have lightened your load though. I mean, this cluster of candles here, if I wasn't around, you know enough. And if I'm pretty sure I said it actually on this day here that we're going to manage our exit in proximity of $1 anyway. But if you didn't do that, then clearly here we're managing exit. So what we're talking about here is really buying back some of our exited stock. And I can see a case for doing it if we can maybe do it up here. Because of the severity of this, I think we want to see, and that was the Queensland Government royalty increase. Let's wait for this. So I'm going to go solid hold. I'm confident about that, but I don't think I'm going to upgrade it to a buy until we're dealing with the top of that supply zone. And look at that low there. So that is, it's coming in around about 70 cents. Let's see how we deal with 70 cents. But for Darren, I think if you've got it, then you've got every reason to hold it. But as far as buying back, maybe not just yet. A bit like that Altium chart, very similar, high quality tech company, doing a bit better than Altium, and maybe there's something just in that. So this is all good. This is all good. A bit like Terracom, where we're starting off really well here in terms of making a rally, and I would need to see how it deals with that. So from a technical perspective, look, let's not fail to call a spade here, right? That's what we're dealing with. Really, we're trying to figure out whether there's any reason to go in ahead of the trend changing. And it's very promising. It's very promising. I can definitely go hold. If it closed beneath 37.57, that thesis is going to begin to change, and then I'm 100% sell again below 34.11. You can't give it any more time than that. Okay, it'll be very much back in this trend. Okay, so be very careful. But if you've got it, happy to hold it on the basis of the improving outlook there in the candles and the price action. WTC, I'm curious about this one. It's not just, it's not always about you. Sometimes it's about me. I haven't looked at the valuation for WTC for a while, and I'm very curious. Let's have a look at its EPS growth, which is amazing. There's got to be some execution risk in that, so I'm going to go moderate. Some of you will shout at the screen and say, "Hey, Carl, that's not fair." They're going to hit 37% average growth for the next 3 years, no doubt about it. And if that's you, then well, I showed you what it looks like at low. I'm just a bit skeptical, because that is an amazing rate of growth for any business. Now, let's get the PE right. Historically, astronomical. Future, much lower. 35 for that growth is a bargain. Okay, 35 for that growth is a bargain. Let's see what the F is at 52. Okay, so remember, because I had target, that's me. I put in my target, all right? But if I go what the market's kind of thinking, 52, starting to look cheap. Me, I think I'm not a 50-50 player anymore. I think when the NASDAQ was on the way up and interest rates are at 0, I could do 50s, 60s, 70s and 80s, right? I could handle an 80 PE. Now I think the market where it is and interest rates where they are, the oldest rule of thumb is your growth stocks, your PEs, they top out around about 40, right? And that's what I'm going to use on this. But it suggests that we are better than fair value here. So I wouldn't say Wisetech is expensive at these levels, and maybe that is why it's doing a bit better, isn't it, than Altium. In terms of valuations, the valuation's looking a bit more attractive than Altium. DDR, DickerData, somewhere between Altium and Wisetech, isn't it? Not completely exciting. Let me do these quickly because I want to get to the bottom list. This is still the case. As promising as some of these things are, don't get me wrong. Maybe I can get to a hold, but beneath $11, you've got to start to entertain this idea that this one is in big trouble. It's in big trouble and it's going down. And certainly beneath here, it's in a world of pain. Okay, so I can go hold on the basis that there's some semblance of a rally here, but I'm not going to ignore this and this, and say that if you are holding, you have to be really attentive to this one. Let's have a look at DickerData over here, DDR. And we are not getting a lot of coverage, only 2 estimates. It's a little bit vague, 12%. Well, I don't think that will be that hard. Well, who knows? What do I know? I don't know enough about it. Target, PE. Let's go market on this one. Probably about fair value. 20 is probably fine for 12%, probably a little bit high even. So I wouldn't say it's cheap. I don't think this is a screaming bargain here based upon that. Okay, next one. This one is for Andrew. Any one or more. Let's we've done PNV, which is great. Let's do PLS, which is a fascinating company. Obviously, you cannot deny that this is the case, and I would not want to mess with that. Don't want to mess with it because look at this signal in here, just how well it's holding the pink zone. This demand side equilibrium crack, right? Crack. Retest, fail, okay? And now this, I think, becomes that key level. Beneath here is a world of pain, is a long-term downtrend, an erosion of price, I think, for PLS. Above that, if you are a true believer, you can hold on the basis that there is actually some demand at 2. It appears to be holding for now, okay? It appears that they have got just enough demand out there to combat the supplies that's in the system. Ideally, we see it come back. If it closes above 249, I think you're out of the woods, okay? I think you're on the right side of this one. Until then, I'm really concerned, okay? Now, a reason why it's quite fascinating is we do have some earnings for this one because they are mining. They are, delivering lithium to the world's, battery metals supply chain. And we're going to get some numbers here. So we're going to get an EPS, 21.4 cents per share, 46.7, and then coming off. So you can see how the brokers are going, well, we're in this upward price momentum phase because we're starting to mine, we're increasing production, lithium prices are high, but then we expect lithium prices to pare back through 24 and 25, okay? Net, we've got 23%, which I don't think will be hard for them to execute, given where they are, and with a P as low as 7 even, there's still value there. And for a company with 23% growth, I could easily go 10. I could easily go 10. I actually think Pilbara is really cheap here. I think it's really cheap. So, again, this disconnect between my idea of the valuation, again, I've just put in numbers. I've just gone, oh, I'd pay 10. Hey, the market's thinking more like 7. I'd pay 10, so what? I'm not going to fight the market on this one. It's not all terrible, okay? But there are some serious problems here for Pilbara. Again, $2 to the downside, big trouble. Needs to get back above 250, I think, to tell us that the demand side is taking over again. Okay, we'll leave it there for that one. Andrew Easton's got one, and he wants IMU, Imugene, which is showing a promising rally, and I really hope a lot of these promising rallies continue, everyone, because I love bull markets, don't get me wrong, but I fear it may just be one of those, false dawns again. I can see every reason to hold this one. Okay, I like everything that's going on here. I can't call it a buy, Easton, because of all this stuff. But I think there's enough in there to hold it. I'd be really concerned if it broke back beneath 18. I don't want to see it close beneath 18 again. So I'm going to give you this a lot today. I can see some signs to hold it. If you're in there, you're interested, you know the story, you like it, nothing I'm going to tell you is going to change anything. Happy to hold it, right? But I need to give you a roadmap out if it all goes wrong. Close beneath 18 is definitely bad. Close beneath 13 is horrific. Okay, now to the upside, close above 24.5. So printing 25, this is going to start to look pretty interesting again. Okay, but let me see how it responds to this zone. Let me see the candles in there. Let me see the price action, the shallowness, hopefully, of the pullback, and with the right candles. Then maybe we could upgrade it to a buy. Much like that thinking with Audinate. It's doing a lot of those things. So very interesting. And let's do AL3 while we're here. Okay. Look, again, same ditto on the last one. Look, this is all very good. And yeah, if you had it, you could hold it. Would I buy it? No, there's just so much needs to happen to get to a buy. So some great early signs. This one is for King. Can I look at ALL? I can. Don't own it yet, wondering if it's starting to turn up. Look, this is probably doing what Wisetech, Altium, some of them may end up doing. We had the promising turn, and then it feels like it's fading to me, rather than building. It just feels like it's fading a bit. Not bad. I think we've looked at this one before. You can see my scratchings. We wanted to see the price action move into high peaks and troughs. It's failed to do it so far. You see my scratchings. You can see I'm saying let's see how it goes here, let's see how it goes here. So nothing's changed. This is not bad, but it's not great. Why am I running out to buy a stock that's just only doing that? BHP is the next one. This one is for Ron. I'm concerned about this one. Last week we talked about this pattern called the bouncing ball pattern on the table. Okay, so there's our table, and we know that when we bounce a ball, and like last week, it's a square ball. We bounce the ball off the table, hits the table, it bounces, doesn't bounce as high as where we started, and then the next few bounces, each time it bounces a little bit lower, and then eventually it misses the edge of the table. And where there is no more demand, imagine that the tabletop is your demand, that demand is gone, and there's only the supply that existed in the system, and which was building in the system too, mind you, right? It was building. How do we know it's building? Well, look at those lower peaks and lower peaks. Okay, and then we fall very quickly. I'm worried that that's a possibility for BHP. Hey, it's holding well at $40, but that's your tabletop. Okay, imagine that's your tabletop, and we're bouncing this ball. Okay, be careful on that one. Ron noting that it's at the bottom of its trading range, big support at $40. He's noting those things, but I think Ron's looking at this more as well. This is where you would buy it. Okay, certainly that's the top of the range. This is the bottom of the range, and that's one way to look at it. I'm not looking at it in the same way. Okay, this one is for core lithium. This one's core lithium for Leslie. A lot of things going on here. It's one we talked about many times because we called an exit here. Okay, then we said, look, think about exiting here, and then we said, well, this is a species-ending event. Then, in sessions post to all of these things. We talked about, remember that key trough I keep talking about, after you've started to get your sell signals, your breaking of trend zones, there again, no reason to be in it. Now we're flirting with this zone here. I'm concerned, it's holding. I'm concerned that if we break beneath the zone, it could go much further down. I think you can hold it as long as it stays above that. That close there is 84. If it's closing 80, below 84, so 83.5 or worse, this I think is what's going to happen. Okay, I cannot be a holder beneath that level. On the basis of this candle and this candle, they're pretty strong. Okay, I can go hold if I really squint, but I do feel that this one's under a lot of pressure. Now, what would get me more bullish on it? What would turn me back into somebody who's looking to buy the dip on this and not sell the rally? It needs to close above 105.5. 105.5, you see the high. So 106 or better, okay? And then I think it's starting to get itself out of the woods, okay? Not in the clear, but it's out of the woods, okay? Whatever's after the woods and before the clearing, that's where it'll be. I would suggest it needs to do it quick smart, as in super quick smart, because these 4 candles are not great. They're not great at all. If I had to give this a probability, I would say that I'm going to go 65%, we end up down here, and I would say only, I'm going to say 20% we end up here, and that gives me 15% we just continue to go sideways, okay? That's how I feel about core lithium right now. I won't do the fundamentals because we don't have time, but I suspect they might have them because they should be in production pretty soon. Silex is one I do want to cover. It just looks amazing. Do we have a supply event? Is today a supply event? It's not shaping up great. Now, I will do a check for update. I should have done this earlier. I'm very sorry, but at 20 minutes past the hour, I do get my update. I've just clicked it. So this is going to give you the update as per an hour ago. And it's actually gotten better. You saw it just change. So no reason to manage exit just yet. However, I just noted, maybe a few people saw it as well, $3 might be a little bit of an issue. In the shadow of 3, you might just take a little bit of profit, but you would not knock out more than a third. There's no reason to knock out more than a third here. You want to hold on to a substantial amount of your position. That third, you're just really being tricky and looking to trade it. You might try and buy it back on a pullback, but otherwise it looks fantastic. It looks amazing. It looks wonderful. So would I buy it here? Okay, that's tougher because I like to buy here. Exactly here. Look at this beautiful demand side candle, wonderful lower shadow. Remember at the start of this, the very start of the session, I said, this is the type of candle you want to see in the light green zone. And there it was. And then it got followed up by the other candle you wanted to see in the up bit. So perfect, 100%, 10 out of 10, buying it there. But maybe on the next leg, that might be the next buy. So if you don't have it, I think you're late to the party on this move. If you do have it, watch how it behaves around 3 for a manager exit, but otherwise the candle's fine today. I don't think I can be any more as comprehensive than that. BNR, I'm very sorry, Jane, I can't see any reason to own that one. Things change. I know it's Jane saying, hey, you called it a buy a couple of weeks ago. I probably did, probably somewhere through here. But, I'm not always going to be there to hold your hand. We have to watch the lower peaks coming in, the supply signals, the breaking of that key trough. And that's kind of around here is where you start to be out of it, okay? Now it doesn't look good. I can't see any reason now, Jane, to call it a buy, that's for sure. And I can't even see any reason to call it a hold. So, yeah, just technical analysis doesn't end at your buy point. It keeps going, okay? I wish I had better news, I'm sorry. Down to Howie, who's at POS, which... Again, it's one of those, if I squint, I can see a reason to hold it. If it closed beneath 4.4, it's in the next phase down. And let's not confuse ourselves here. Okay, that looks terrible. It's not a buy as far as I'm concerned. Jane's, because I messed you up on BNR, Jane, I'll certainly give you a second one. Sonic, I can go ditto on this. Let's not confuse the issue here. Commendable performance through here. If it's closing beneath that low there, and that's 31.96, then I do believe it's in big trouble again, and it can go much lower, okay? So I'm super concerned about that one, super concerned. NASDAQ, a much weaker rally than the S&P 500. I'm concerned about what happens in there. Okay, so watch for the candles through there. If we can smash through that with some decent candles, close above 11.678, then there's a chance that we could see a bigger rally. Otherwise, it's going to be more of the same. Jill asking for PME. I can just do one of those, Jill, because I honestly had no idea we're so far over time. One of those, again, high quality technology focused stocks, this one in the medical field, all very commendable. In fact, it's done enough, Jill, hasn't it, to change the short-term trend. It's changed the trend, and now it's using the trend zone as support. Wonderful, 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 but it's got to do it again here. It's got to deal with this long-term downtrend zone, okay? And if it was to do that, then it would be back in my buy camp. Until then, I can see a very, very solid case for holding. Why? Well, look at all this wonderful stuff that's happening, okay? Compared to a lot of the other ones, I've said maybe not a hold, it's actually getting above that short-term zone. It's changing the short-term trend. Wonderful candles, okay? Not a buy just yet, okay? But if you've got it might give you some comfort in hanging in there. Oh, I'll do that other one. Oh, this one not as good. You can kind of see why they're a little bit concerned about this. Again, a lot of, is this the false dawn, everyone, before Kaputski again? Okay, I wonder. Betfair for Betmakers, not Betfair, looking good in that it's starting to deal with this. Ron, I like the higher peaks and higher troughs. I can't get to a buy yet, but it's on the radar. Okay, it's on the radar. Looking interesting. The fundamentals on that make it look very, very cheap. Johns Ling, this looks good. Look at this. Look at this. All these commendable things I'm seeing. Is this the start of the next bull market, or is this the false dawn? We're in the. I can't give you any definitive answers until we start to do this sort of stuff. And sometimes we have to be a little bit patient and wait for these things to occur. I can get to a hold. I'm a broken record here, but I can't get to a buy. Why? Because of that. Resmed looks good. I'm surprised. I haven't looked at the chart of Resmed for a while. It's doing a lot of the stuff we want it to do. Solid hold again. Is it a buy? Probably not a buy until we see something like this, Melissa. Okay, but if you've got it, take some confidence that this stock is significantly outperforming the broader market. How do I know? Well, that's the other indicator. See that down there? That's that relative strength comparative over 3 months. So you can see how it's flashed back to green. That is where it is beating the broader market, and that's always a good sign. Okay, now if you're watching me in the recording, you've no idea what I just did, okay, because I've just changed what the people in the recording see, okay? They've just shown them another indicator. Nick, NIC, I'm trying to get to the second Silex, which is where I said I would finish, that's all. This one's easy. Think of all those promising signs that we've seen, Mohammed. All of those high peaks, high troughs, white candles coming in, challenging, changing short-term downtrends. None of those things exist here, okay? This is very close to a sell for me. SRN, Surefire Resources, maybe. If I squint, I can see a reason to hold it. If I squint harder, I can see a reason just to be out of it, to be honest, and just say, well, there's going to be a lot of these things that were brilliant here, that were hero here, that are going to be zero for a very long time. And maybe on these rallies, let's not kid ourselves, maybe we need to get out. Okay, Bank of Queensland. Looks fundamentally and technically long perspective. This is for Raju. Now, long, I have no idea what technical analysis you're doing, Raju, because there's no long here. There's no long here at all. I mean, clear downtrends, absolutely clear cut. Yes, I can see some evidence that we've got a higher trough, but the candles are not inspiring. Look at all the black candles through here. We haven't dealt with this. We don't even look like doing it. Until we get above this high here at 694, I couldn't even, with my highest degree of squinting, say that there's a technical reason to buy it. Fundamentals, I don't know, and I don't have time to look at it, but no, not a buy at all from a technical perspective. That's good. I'm at the bottom of the list. Sorry for going over time, everybody. Other than that, if you're not a client of Think Markets, you really should be. We do have all the products you want to trade over here in terms of shares, crypto, CFDs, ETFs, anything you can think of, and all with great rates, great service, and a great platform as well. There is an incentive if you've watched me and Ask the Experts and you're not a client of ours, 20 free trades to kick you off. Terms and conditions will apply. Head to the website for details. If you are a client, find 4 of your friends, get them to come over to us, and you could get 12 months of potentially free trading. Again, terms and conditions apply. Head to the website. All very simple. Just need to use those trades within a certain time frame. If you watch me on YouTube or any of the other socials, please hit subscribe to make sure you get notified of our next video update, or smash the like button to make sure we know you like what we're doing. We'll keep doing it. Apart from that, it has been a pleasure chatting with you today. Sorry it went so long. All the best for your trading and investing until we catch up again. Bye-bye for now.